Good morning. I'm Karl Kaufman, and this is the Morning Market Minute for Wednesday, May 4th. In college, I first heard the rhyming maxim, beer before liquor, never been sicker. Liquor before beer, you're in the clear. This pearl of wisdom was accepted as gospel, a surefire way to avoid a wicked hangover after a night of heavy drinking. It turns out that the maxim, while memorable, was just a myth. It even served as inspiration for a Mythbusters episode. A widely believed myth in the stock market, also conveniently rhyming, is to sell in May and go away. This saying comes from the belief that the stock market gets most of its gains between November and April, while it tends to go down or trade sideways from May Day through Halloween. The sell in May strategy is commonly used by technical traders who sit on the sidelines during the summer when trading volume is lower. It's essential to make a distinction here. Traders are not investors. Many traders are looking for short-term action with high volume levels. If there's not much volatility, it's harder to make good trades. Let's say sell in May and go away does have statistical relevance, and the broader market tends to decline or trade sideways for 6 months. Individual stocks, however, are still prone to significant movements based on earnings and new information that doesn't hit the pause button for 6 months. Your job as an individual investor actively managing your portfolio is to think differently and be on the lookout for opportunities. Here's what you can do instead. If others are selling, maybe that's the time you'd want to buy. If you've done enough research on a company and think it's trading lower than it should, buy the stock on sale. Take advantage of others' foolish actions to improve your long-term total returns. You may have to deal with short-term volatility, but you can add to long positions while others sell into a downtrend. To base your long-term investments on a famous saying is a silly thing to do, especially a saying that no one can even agree is true or not. A quick web search shows differing viewpoints, with headlines ranging from sell in May and go away is turning out to be the right call to 5 reasons not to sell in May and go away. Clearly, no one can make up their mind. MarketWatch columnist Mark Hulbert traced the sell in May pattern back to 1896 and wrote, "This pattern's historical track record can be traced to only a few years, specifically the third year of the presidential 4-year term. During the other 3 years of the 4-year term, in contrast, the pattern is statistically non-existent." Don't follow the crowd. Historical trends don't always predict future outcomes. There's a reason that every single investment product carries a warning that past performance is no guarantee of future results. If you must follow a mantra that's easy to remember, might I suggest something different? It's something even Warren Buffett can get behind. Buy in May and hold till gray. I'm Karl Kaufman, and I hope you have a profitable day.